This is Robert Miner with Dynamic Traders Group with our Saturday, October 6th YouTube DT Reports video update. It's a brief overview of two or three markets and potential trade setups in the upcoming week. As I mentioned last week, I didn't trust this weekly momentum bull reversal that was made the prior week because it was such a narrow range inside week, a very narrow range inside week. And typically we ignore inside bars on technical signals. We uh, act as if they didn't exist because they're indecisive bars. They're not related to a trend or a reversal. So what happened this prior week, now we have an outside down bar in the weekly data, which reversed the weekly momentums right back to bearish. And they're not oversold, and we should have another 2 to 3 weeks anyway, sideways to down in the S&P. And if we make a close below this week ending September 7th, low at 2869.50, a weekly close below it. The S&P is likely, as well as the other indexes, to be sideways and down into Thanksgiving week. We'll certainly have corrections along the way, several days, maybe even corrections of a couple weeks, but those are two significant time targets. That's the week ending November 23rd. Daily data is again, Thursday, Friday, big down days, but just to be aware of that the 8th and the 9th, that's next Tuesday and Wednesday, have two key time factors that would be probable for making a daily low. That's a low that lasts for 3 to 5 days. With the daily momentum bearish, as we'd anticipate, another 2 to 3 days sideways to down before we complete a daily low, and it's likely to be complete by Wednesday. But any rally, any advance, is likely to be a 3 to 5 day correction within a bear trend, which has further to go on the downside before a weekly low is complete. Notes and bonds didn't complete a weekly low last week as anticipated, or the prior week in last Saturday's video, but with the sharp, and they also didn't make a reversal confirmation signal that a weekly low was complete. So what happened? Boy, we had a sharp decline this past week to a new low, and now from an Elliott wave perspective, the picture is clarified greatly. This is monthly data. So this is long-term data going back to the June 2016 high. And for those interested in Elliott wave, this is now a textbook 1, 2, 3, 4, and 5. And when 5 is complete, whenever that may occur, we would have a rally and a corrective rally greater in time and price than any of the corrections within the 5-wave trend. That means it's going to last more than 4 weeks and probably actually more than 6 weeks of a corrective rally over, excuse me, this is months, 4 to 6 months corrective rally. So that's big. Question is, how do we identify if the low is complete? Or at least some technical, we can identify in advance what technical conditions must be met. So I'll keep with the monthly chart for a minute. This is 127, 162% external retracement of the width of wave 4, and that's a typical target for a wave 5. So just in last week's decline, we've reached that typical target for a wave 5. This is the weekly data coming down from the September high, which I had labeled as a wave 2, and then the 3 and the 4. And again, we're just seeing the weekly data. The weekly momentums are dual look back oversold, and that means we're within a week or two, typically at least, of making a weekly low, and a weekly low should correspond with that major wave 5 low, which should coincide with a monthly low. What's important next week, the week ending October 12th, is the high to high low count, and that's typically the maximum for a comparable, in this case, weekly low to be made. And since we're in that period to where we price position, at least where we may make a multi-month low, really want to be alert next week for any reversal signals. Here's the daily data coming down from the wave 4 high. This is what we call multiple time frame analysis, and we do it on price, time, pattern, and momentum. And again, subdividing into 5 waves, and here's that wave 5 over the last week, and we'll go down to 240-minute data and wave 5 of 5 of 5. 1, 2, 3, 4, 5. So if all these wave counts I'm showing you are correct, and they all fit in pretty well. We should complete this major low next week. Now we need to close above last Thursday's high to signal that that low is complete. But boy, that's not too far above where the ended up on Friday at the new low. And boy, there's a lot of potential upside. So with our regular subscribers to our reports, we send out email daily updates and any day that a technical change or reversal signal is made. So, but notes and bonds, really be aware of them this week and potential reversals. This is the Euro weekly, and weekly momentums are bearish. They're not oversold. That usually implies there's another 2 to 3 weeks sideways to down ahead for the Euro following this ABC correction. This is the daily data. Daily momentum's made a dual look back bull reversal, and that means more than likely the euro will be sideways to up for 3 to 5 days. But because the higher time frame trend is bearish, any advance should be a correction within a higher time frame bear trend. And we had two significant time factors last Thursday and Friday, October 4th and 5th, which gave us the 4th and 5th as the ideal time to complete a daily low. It hasn't been confirmed yet, but we did get the low so far on Thursday, and we made a dual look back momentum bull reversal. So more than likely, we've completed this initial decline and will be 3 to 5 days sideways to up. And when that correction is complete, we should then continue with the bear trend. Well, that's it on a few ideas you might have for next week for trade strategies. If you're interested in what you learned here today, is our typical tutorial, or excuse me, our video update for subscribers is 20 minutes plus long instead of just 6 or 7 minutes like we had here. Plus, we have around a 15 to a 20-minute trade tutorial once or twice a week. Those are specific trade strategies tutorial to teach you trade strategies. So if you're interested in all that, check us out at dynamictraders.com. And for sure, if you're not a subscriber to this YouTube channel, subscribe to it so you'll get notified when we put up these brief video updates on YouTube every Saturday. Take care.